Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the US 30 on a 2-hour chart. There's not a lot of change and everything's pretty much unfolding the way it should be, in that we've got this little 5-wave sequence to the upside here, and this is the same with the Nasdaq and the S&P 500 and the FTSE and the DAX and so forth. And we're looking for a, after an impulse wave, 5 waves, we're looking for a 3-wave correction. So we're looking for an A and a B and a C wave to come down, and normally that would be pulling back to the 50-60% retracement level, which would be coming in around this area through here. So it can come lower through here. It's had its first little retest here. This could also be the A, the B and the C in here and finish on this trend line through here and move up from that point. I just don't know. It looks a little bit small to be in proportion and ratio to the size of this move down through here. But I'm always ever hopeful. Let's just see how this unfolds. We knew it would be tricky here. The thing with corrections is you just don't know how large they're going to be. They can be, this size here or this size here. You just need to allow them to unfold a little bit. But the point is, it's under 13,000, so it's got a negative bias towards it. So you wouldn't really go long unless you're on top of the 13,000. So that keeps you safe at that point. Normally as well, within when in the bigger picture as well, if we were looking at the sort of the larger picture through here, then we would understand that from 13,000 we look at group 1 above, the 10, 20 and 30, the 100, 200 and 300 in this case as group 1, and also the first these are minor levels, and the first minor level here at 12.8 here. So that's really the range that we're working in here. It's only when the support becomes on top of group 1 here that the price would be separated from the 13,000, and also down here at the 12.8 too. Once that becomes the resistance there, then it's rejected the 13,000 at that point and would be working lower from that point. But in the first instance, once we understand that this particular range here, while the market creates the 13,000 as the balance point, if we work smaller than that, we understand that we're getting the classic trading levels pattern. We get the arrival, the reaction, looking for the first support, and then the little first high above the level here. And that's normally the 5th wave, and that normally completes the section that we've got up here. From here on in, we'll be seeing swings. The first swing normally comes into the first level above the larger level there, but we'll be seeing larger swings come into play in this area here. So there's nothing much I can sort of say or do. The US dollar is still pushing to the downside, so we'll see indices and other currency pairs continue to push to the upside. And the same with the European market as well. If we look at the find the FTSE here for a second, just bear with me here. This is the FTSE. It's got the same sort of picture as well. It's had its correction here, and it does look sort of positive to the upside here. If you're day trading, you'd be long off the group 2 here, the 72. And then adding on to the 80 here. But as mentioned the other day, we know that we've got strong resistance at the 5.9, and the same for the DAX as well at the 7.5 as well. So these are all these markets are just going to be doing the same sort of thing. The same with the Australian market as well, in its own little way here. It's having its corrective process. It never found support on top of group 1 here, the 10, 20 and 30. So it brings it back to this number here. We could see that it was running out of steam, as mentioned yesterday, because you can see the really, the extending part, the strong part of the structure here, and then you start getting, it starts to creep to the upside, So it's got weakness in it at that point. The question is how far will it come back? Well, when the price moved down yesterday, it moved down on lower volume. We can have a look at that actually. This is CBA here. CBA has been a leading stock, so we might as well just have a look at this while we're here. And it's sort of coming to the end of its structure too from this point here. So in a 5-wave structure to the upside here, as such, we'd be looking at this is wave 1 to the downside to the upside here. So it would be up for wave 1 here. Little ABC here is an expanded flat. So it's wave 1, wave 2. And the wave 3 here is all the way up to this point here. And this would have 5 waves in it: the 1, the 2, the 3, the 4, and the 5 to here. For the top of the wave 3, the wave 4 here, and then the wave 5 up here. Now the wave 5 up here will also have 5 waves in it as well. So it would be looking at it in this terms here. Now that's pretty much how it looks at the moment. So this is up for wave 1 here and wave 2 in here. There's a third wave in here. And then we're looking at the fourth wave pulling back through to here. And the wave 5 will be somewhere up here. I was thinking of the 61.8 up here, $61.80, just as a ratio thing. But yeah, so still a little bit more to go in here on that leading stock. But I wanted to have a look at the indices, actually, our market here. So just looking at this here, we can see that can't see anything just yet. Just bear with me a second, so I can just want to bring the volume into the picture here. We can see that we've got lower volume on this downtrend here. So it means that the sellers are not in there yet. Sure, we may see a move down here further today as well, but let's hope that it's on lower volume as well, and that means that the sellers haven't really come in and started selling out just yet. So so in that, coming back to the cash market, to the ASX CFD here. At the moment, coming down here, we've basically got it down in 3 waves, okay? Now, if this moves straight down through to here, then that would create 5 waves down. It would create 1, 2, 3, 4, and 5 down to here. And if we get 5 waves here, if that is the case, then we'll get 3 waves back up, and then we'll get another 5 coming down, okay, for a larger ABC correction. So, that's as it stands. If it finds support on the 45.10 and then starts to climb up, then it's there's a positive price action from that point there. Finding support on the 45.20 would be nice. Then that would sort of really create that as an ABC correction. So let's just see how that goes. So if it moves down through here, then you'll know what to expect next. So if you get 5 waves down here, you'll get 3 back up. Depending how far this comes down as well, then the 3 waves may only retest the 4,500. That's something you have to look at when it occurs, and then you'll get another 5 down from that point there. The 45.50 is a strong support line, as is the subgroup 2 here. So, but as above, so below. So the distance above can be the same distance below, that bringing to the 4,500 there. All right, let's have a look at commodities as the copper price is strong. Just looking at the gold price, starting with the gold price, and looking at the gold price here, is that it does appear that because we've had this stronger move down through here with the gold market, it's a daily chart, then it really cuts this in here as a corrective wave to the upside, as an ABC correction through here. So we'll see this C wave come down through here. The C wave is normally in an ABC correction, a zigzag. It's normally got the same, some sort of equality between the wave C and the A wave through here as well. So it's highly likely that we could see it down at the 1650. So we need to be prepared for that. And that means we also need to start counting this down here as an impulse wave to the downside. So we need to count that impulse wave. Impulse waves are 5 waves. And let's have a look at that. So just breaking that down to the 4-hour chart, it would look something like this. So we'd need to be looking at this as down for 1, back for 2, down for 1 in the next smaller, so wave 2 here, looking down for wave 3 here, be down here somewhere, and from wave 2 to wave 3 there'll be 5 waves, so we'll be looking for 1, 2, 3 into here, 4 and 5, something like that anyway. So wave 3, wave 4 and wave 5 to go further down. So if we break this structure down here a little bit further as well, we can start to get a better idea of it. So we've got 1, 2, and we're in the 3rd wave coming down. So we've got wave 1 here, wave 2 here, we're in wave 3 here, and in wave 3 here, it does appear that we've got the 5 waves in there in terms of the 1, the 2, the 3, the 4, and the 5 either to here or one more little push down into here, and then we'll see a wave 4 come back. The wave 4 can't come up that high, so we'll be holding that down into this area through here, and then wave 5 further down in through to this area through here, so it would look something like that. The silver will be exactly the same as well. Let's just have a quick look at silver. Okay, so it's already moved down a bit further than I expected. I'll get a smaller view on that just in case trading silver. So basically you're looking for a failed retest at 33 here. So break that down into the sub-levels and start looking at 32.72 there for a short. So once it's retested 32.72 as resistance, then you can add to the short position or take the short position up from that area there. Let's have a look at the oil market first. Okay, so this is the oil market here. This is a 4-hour chart, so it's a slightly bigger picture here. So we can see that it's trend channeling to the upside, but also we're seeing overlapping structures to the upside. So we're seeing the whole move up to the upside. It appears to be a corrective pattern, but in saying that, it's still edging to the upside, and we sort of see it that we should see a move as an A and a B and a C down to this area through here. The A wave is probably complete there, and then we'll see a move to the upside through there. But it's under the 90 there, so that's the closest largest number, and the price has been retested and rejected at that point there. So now we're seeing it as support there. If the 88 became the resistance, then that's where the short trade setup would come into play. Otherwise, you need to allow this to play out a little bit further. So just breaking it down further, as you know, we were tracking a little 5-wave structure to the upside, and that's completed. And now we're seeing an ABC correction. So we see the same with the indices as well. So here we can see the 3-wave movement in here. So that can be the ABC correction. It could be completed there and push up from there. But we also need to be mindful that corrections can just double in size. So this ABC down through here may just be the A wave, a B wave, and then a C wave here. Then we move up. It's just a little bit hard to know what's going to occur in those situations there. But we could say that if support is found on, say, 88.50, then you could glean a small position there, and looking at 88.72 to add to that position, and then looking to add on above the 89 as well. So as you feed them into the market, the positions into the market, then you can feed them out. That's the benefit of having more than one position. Lots of smaller positions at different price points helps you navigate the bends in the river, so to speak. The copper market, which is the sort of more interesting aspect for our local market, is going strong, and as I mentioned yesterday, we'll be having a correction at the 365, which is the first level in Group 2 of 65, 72, and 80, and yeah, so this can pull back. The closest largest number would be 360, but 362, 363 would be somewhere sort of in here as well. But expecting a wave 4 to unfold across here, which would be a little bit complicated as wave 4s are, and then a push up there. But what this does, it does create, it gives the resource sector some legs, basically, and at the same time we know that it's going to be into a wave 4, so we can expect the next few days to be lower and choppier price action. So it may collect stops, it may not, in terms of looking at mining stocks. Alrighty, let's have a look at FX, and as the US dollar continues its path to the down. Okay, the US dollar pretty much doing what we expect it to do, I guess. The bottom line is that this move through here is corrective, so we should see new lows made here. That's the bigger picture, and breaking this down here, there's a couple of ways to do it, but this is the first and simple point here, is that we've got down for wave 1, back for 2, 3, 4 and 5. It is extending in the little third wave down through here, so we're still looking for wave 5 in this case, down for wave 1. We were looking for that at this point here, I think from yesterday or whenever, expecting a wave 2 to come back up through to here. But now this has moved down here further, it really helps that they'll see the wave 2 come into the 80 here rather than too far above it, you know. Yeah, so just breaking that down even further there. This is counted slightly differently here, but the main point, I always like to keep a couple of counts on the go so I can sort of understand things a bit better. But this is still unfolding to the downside here. That's the main point. So the point is that group 2 here, the 72, 65, 72 on the 80, you can see that it's been rejected at 72, and now it's starting to reject inside of the 79.65. So that will eventually see the price at the 79.50 here. But I can see that we've also got little 5 waves in here as well. The 1, 2, 3, 4, 5. So we've got 4 and 5 here. So we're going to see a bit of an ending here. So that can actually come up a little bit now into this area through here. So we'll still see a retest. 1, 2, 3, 4. Still got. We'll still see this wave 4 here. So a bit more of a battle in here before we see a drop to the downside through here. The euro will be doing the mirror opposite here, of course. That's the Australian dollar. So the euro, it's the weekly picture here. It's a weekly chart, but it's good to have a look at this too because, as mentioned before, we've got this 3-wave price action here, and even if you don't understand Elliott that well, you know, it certainly helps to, you know, to be able to look at a correction like this and then say to yourself, well, you know, that's in 3 waves. That must be an A and a B and a C, and it's a counter trend, so that high will eventually be taken out. And that's what we'll be looking for here. So we'll be looking for this to move up through to here, taking that high out there, and then folding back into the level here, because this level is 1.30, which is a minor level. It's the top of group 1, and it's normally the first high above the level normally is the 5th wave. So it's normally the top of the 3rd that hits this, then the 4th wave, and then the 5th wave. Even though we've got this counted sort of differently on the charts, it still can be counted as an alternative wave 3 here, an ABC for the 4th here, and the 5th wave up to here. Not that it makes any difference at this point, because what we're actually doing at the moment, we can track this up here as an impulse wave, as 5 waves. So it could be wave 5 up here, or it could be wave 1 up here as well. So not that it matters at this stage, because we will see 5 waves up and we will see an ABC correction, and we'll pick that up from when we get there. But that's all we need to really know at this stage here. So it's really a matter of working this 5-wave structure to the upside, and in this structure to the upside, that top there would be the 3rd wave, that would be the 4th wave here, and the 5th wave up through here. So we're still working that 5th wave up through here, and in this 5th wave up through here, we're only at the 130, at the 131. We're close to 131 there. That's also the top of a 3rd wave here. So it'll be the 4th wave across. The 4th wave across the 131, and then the 5th wave up, okay? Which should take us closer up to the 132 there. We need to make a high above this here, which would be the 131, close to 72 there. So I got it here anyway, rambling on a big chart. So look, top of wave 3 coming in through here. We'll be looking at a wave 4, which will be further up now, and then pushing further up. So we just get into this here. So we're looking at the 131 through here. So we've basically had the arrival, the reaction, the first high above the level, because it's the same picture just in smaller degrees. So it looks like we've got a little 5-wave structure up through there. So you're going to see a little ABC structure come back through here as well. So after you see a little, this is a 15-minute chart. If you have a look at a 5-minute chart, an A, B, and C correction across here. After that, If it is in three waves, then look for support on top of the 131 and go along from that point there. The Australian dollar and the euro are pushing stronger to the upside. Those two are the leading bullish ones at the moment. It's just those two by themselves actually. Okay, for the Australian dollar here, don't pay too much attention to this wave count here, but what we can pay attention to is the 105 here. So this is the third time this is coming back up and testing this here. If this ever finds support on top of the 105 here, then it really flicks it over to the bullish side. And what I mean by that is that we've got the $1 here and the 110 here, so the 105 is in the middle. So this is the balance line for this correction. So support on here basically flips it to the upside, and we can look for long trades based off that. Yesterday we were looking at the 104 here, because the 104 this doesn't normally be the case, but in this case has been a really good balance line for the Australian dollar, and this may not be the way to count it either. And the reason for that is that if we counted this up as 1 here and 2 here and 3 here and 4 here, the wave 4 does overlap wave 1 here somewhat. But I do find that happens a lot within leverage products, like currencies and commodities. So kind of allow that to pass over. But look, not that it matters too much at this stage as well, because whatever happens here, if we do see a move above the 105 here, then we're going to see an A and a B and a C correction across here anyway, and then we'll wait for support up through here. But it is pushing nicely up to the upside, so pretty much run with that. If I can just get this on a smaller picture through here. Still the 2-hour section, but you can see here in the 2-hour chart here, you can see that we've got up for 1 here and back for 2 here. Okay, so this is the top of wave 3 here. So you'll see a wave 4 pullback, so that more of a correction in this little area here, and then a wave 5 to the upside up through here, and then a larger A, B, and C correction across here. I think I've got this on a smaller chart here. Okay, a bit better there. So it's a 20-minute chart here. So we'll just call this up for 1 here for the time being. Wave 2 here. This will be the top of wave 3 here. And we'll see a wave 4 come into this area through here. It's really holding nicely within group 2 here, but we'll see a wave 5 move up into above the 105 very shortly. But yeah, a bit tricky. Just because the session's ending and new session starting, it's best to just let the new. If this was halfway during the session, we'll go along off this 72 here and add on top of the 80 here. But because of the end of the session, it's not such a good thing. The positions are winding down. So once the market sort of kicks in, volatility starts to kick in again, look for support wherever it may be on the 72 or the 80 and go along from that point. But just be aware that if you jump in too early, we may get a spike down through here before we get a push up. So one down and then a push to the upside. So just allow that to open and settle first and find its path. Alrighty, well, yeah, look, that's it. Not a lot of change from yesterday in terms that we know that the indices are correcting and are still correcting. We're not seeing impulse waves to the upside yet. We're seeing metals being reasonably steady and firm while all this is going on. So it's just a choppy little environment that we're in terms of the wave structure. And the other big thing has been the rates coming out. Australia's had its rates. We've still got the UK and other markets having their rates. It's also a manufacturing week as well, and an employment week as well. We've got GDP figures coming out today for the local market, 11:30, so day traders need to be aware of that. The other interesting point today is in the US, we've got the ADP figures coming out, and they're the private employment figures, so if they will have bearing on the non-farm payrolls coming out on Friday. So what that means is that we can look at the ADP figures tonight, and we've got a very good understanding of the direction for Thursday and Friday. So that's the beauty in the ADP figures. Sure, some of that can be priced in already for the Friday, but it always seems to give a reasonable lead in for that. So if we can get a positive reading on the ADP figures, that means that our little ABC corrections that we've been looking at will be complete, and we can pretty much sort of ride that up on Friday. So we can look for an uptrend on Friday and Monday as well. So that's what we're sort of looking at, and try and we've got to keep tight stops on our robo long positions, because we need to protect what we've got. The first rule in investing: protect those assets, and and we'll have a few shorts in the market just to hedge our way through that as well. Alrighty, well, good morning, good luck, enjoy the day ahead.